Good morning, David Coombe here with the CBS AM Debrief this Tuesday the 13th of September, almost halfway through the month already. It really does seem to be flying, and I guess a lot of this excitement going on in the global markets does help sort of speed things along. Never a dull moment, at least it seems to be that way to me. Last night, most of the market action really was driven out of Europe. Having said that, though, we did see quite a good recovery on the Dow. In fact, it was really just in the last little part of the trading session that it came up a total of 236 points from the day low to end up closing up some 69 points at the end of the session, which is 0.63%. The other indices there following suit, with the Nasdaq up a little bit more further still. So it seems like some of the bargain hunters came in during the course of the session there, could see some good value. We know that Obama's come out and called the jobs plan a double dip insurance. Now that really does suggest that they really were of the view that the US was sitting on the edge of the precipice there. And certainly it's looking like that in Europe, and that's what precipitated the most recent sell-off here in the global markets on Friday night. And that was in no way, was that not helped by the resignation of the EU chief economist there. Now, maybe the stress is getting to the poor fellow, or he sees that the European Union is sitting too on the abyss, not just of a recession, but something a lot worse, where we see another one of these GFC style situations develop, where the banks become very nervous and then they don't want to lend to each other because of the counterparty risk, and the whole financial system freezes up again. And we know that from recent experience, that that takes a fair bit of sorting out to get on top of. So yeah, this prospect of a global recession shouldn't be ignored. It is real, it is credible, and we really just don't know how bad the situation is going to get in Europe before it starts to get better. So we need to be mindful of that, and yeah, play the market up and down as we see it. But to be long in this market, it seems, is or all long, it seems to be pretty suicidal. That said, we will start to try and look at some opportunities for some good defensive stocks that you could consider that are paying a pretty good yield, particularly now that some of the bank interest rates, term deposits and whatnot, the rates they're offering there are starting to come off there. So anyway, probably gone on about my views there. So let's move on and have a look at some of the rest of the numbers. The biggest mover here was France. Where's that? The CAC down 4.03%. Makes our move yesterday seem not that bad at all. Where we ended up down 3.72, so still pretty bad, but that was a big one. And rest of Europe pretty much in line, but to lessening degrees. Where we ended up finishing up with the Hang Seng down 4.21, so it was off most of all in our region. The Nikkei 2.31, and the futures have us up 41 here today, so a little bit of a recovery coming off that 4,000 level for the SPY. Hang Seng's not doing that well here on the SPY, apparently down 727. I'm not quite sure what's causing that. We might check into that a little bit later on. Let's have a look at the commodities now. Crude's recovering here a bit, putting on nearly $1. Natural gas still under $4. In fact, it's actually given up a little bit of value there. Into the softs, we're looking here and seeing sugar up nearly 2%. Lumber down quite a bit here, nearly 4. Soy down 2.16. Wool steady. Rough rice up 0.22. And cotton up 0.38, it's continuing to like that trade. It is continuing to trade in the direction we suggested it might, which is nice to see. Corn up 1.22, and that was probably the major movers there. Copper 396.55, down 3.70 cents, and gold at 18.13, gave up a lot there, down $46, and silver at $40.21, down 1.40. Currencies, euro buying 1.3667 USD. We have seen that big sell-off in the euro as well. We are at some fairly key levels there, which could suggest we're in for a worse ride here. Anyway, US dollar 77.1497, buying of the yen. The Aussie at 1.0353, probably getting towards a last chance here to my mind to lock in some good holiday value. It's pretty easy to do if you've got a Falcon Trader account. You can trade down to around $5,000, I think, and lock that in. It takes almost no margin to put that in place. Give us a call if you want to know more. The Aussie buying, the US dollar buying 99.26 Canadian, and the US buying 88.11 Swiss francs. Okay, let's have a look at the economic calendar here. Really, not a lot of data of any great significance. I've got the NAB business confidence numbers out at 11:30, and then later on this afternoon, the CPI numbers out of the UK. That should give us an idea of how the UK is currently tracking there. And that's about it for the economic calendar. Take a look at the Falcon Trader here. Just looking here at the natural gas chart, really does, excuse me, seem to be at all-time lows there. Following up on a couple of other trades here. Okay, and that's St Barbara there, which you talked about on that breakout above 205. It's really done very, very well for those of you that got on board. It's now up towards old resistance here, so I think I suggested on Thursday that it's probably time to take profit on that one. What else are we tracking here? Continue to be in Aluka. That hasn't done very well in the last couple of sessions, but it is still staying in this pennant formation. But yeah, I think just need to be a little bit patient there. Might have got the timing wrong, or if it goes much below that $15 level, I'd be tempted to to say, pardon me, I got that wrong, and to jump out. Okay, just take a look here at one I just mentioned, which is cotton. Okay, so that's actually just tracked off there. We weren't seeing that on the Dow, but it continues to stay above that breakout level, to my eye, which is just here at 330. So if it did come back much more than that, I'd probably start to get a little bit concerned about that one as well. Just going to try and find our dollar trade there, but might have to load that up, and then we'll take a final look at the local index. So we have actually taken out that old high, the old low there that we touched down on that would have been, I think, Thursday or thereabouts, and we have closed lower. So to my eye, there is not really a lot of support between this level and 3,800 to be back down at the October 9th lows, August 9th lows there. Pardon me. It looks like we will make a higher move here today, according to the SPY. So we may get a little bit of a formation there, but yeah, if we go any lower here, then I don't really see a lot of support between that level and 3800. Okay, well, I'm going to finish up there. Thanks, as always, for your attention. Till next time, bye for now.